again to those who have just joined. We'll just leave a couple more minutes for the last people to join, and in a minute we'll get started. So, hi everyone, let's get started. Good morning to you. Well, if you're in the Americas like me, or good afternoon, good evening, wherever you are. We're delighted to have you here today as part of our series of webinars on making inclusive insurance work. Today we'll be focusing on SMEs, and yeah, perfect. Let's get started. So let's move on to the first slide. So let me start by telling you a little bit about the UNEP, PSI and ILO webinar series. This is a webinar series run by the ILO in partnership with the UN Environment Principles for Sustainable Insurance Initiative. It's part of a global agenda of ensuring for sustainable development. And we're organizing a 6-part webinar series. The theme is making inclusive insurance work. And as I mentioned, today we'll be focusing on SMEs, but there's plenty of other interesting webinars coming up, and I'll be telling you more about them at the end. So let me tell you a little bit about this webinar system for those of you that are new to it. Please can we bring up the slide on the webinar system? Just a moment, just checking that the slide comes up. Perfect, here we go. So the system's pretty simple. There's not too much you need to do, just to know that you can use the little red arrow to hide or unhide the control panel. We will be opening one poll during the presentation, and you'll just simply click directly on your answer. The most important thing is that you can use the box that you see here, enter a question for staff, to please tell us what you think, type in your questions, type in your comments. We will be having a good Q&A session at the end, so we'll respond to the questions at the end. So please type away during the presentations. So let's start off by presenting our speakers today. I'm really excited by the 2 speakers that we have today. The first is Jeremy Gray. He's an economic researcher from Cenfri. He's a senior research associate there, and he's been part of their team since 2012. He's worked on all kinds of projects across all kinds of countries, including Swaziland, Lesotho, Zambia, and so on. And he has a master's in economics. Thanks a lot, Jeremy, for joining us today. We also have Nick Smith. He's the Global Head of SME at AXA. So this is a really exciting opportunity to hear directly from a large insurer who's really taking very seriously the topic of insurance for SMEs. 2 years ago, AXA created this position of Global Head of SME to reinforce how important this topic is strategically for them. And Nick is in charge of the strategy for the group on SMEs and implementing it across 20 countries, including many emerging economies. So we're really lucky to have both of them with us today. Finally, let me introduce myself. My name's Alice. I'm a research analyst at the Impact Insurance Facility. I'm based here in Lima in Peru, but I also take part in many projects, including projects serving small businesses around the world. So let's move to the background slide. As I'm sure I don't need to tell all of you who are joining this webinar today, small businesses are absolutely vital to all economies. However, they face really substantial risks, and they really struggle to manage those risks. Despite the very high level of risk faced by small businesses, they are across the globe in developed and developing countries underinsured. And in many cases, in fact, they have no insurance at all. The statistics on this are quite striking. So in short, we have a market which has a very high need for insurance and is underserved, and therefore represents you can see the potential insurance products for small businesses. Just wait to move to the next slide. So this is part of a study that the ILO carried out last year into the potential of insurance for small businesses and the good practices that we're starting to see emerge around insurers offering products to small businesses. I'm just getting a message that perhaps my voice isn't coming through. Can you hear me now? Okay, perfect. I'm sorry about that. Perhaps the internet connection isn't great, but it seems that you guys are able to hear me now. Perfect. So as I was mentioning, we carried out a study last year into the potential of insurance for small businesses and how those who are more advanced in this field are already tackling the problems in offering insurance to small businesses. And here we lined up all the risks that we felt were particularly relevant to small businesses and all the potential insurance covers that could be offered for them. And I think what was really interesting for me when we carried out case studies of 12 different providers who were already working in this space in emerging economies, we found that a lot of these covers are already being offered in some way. So if we move to the next slide, you'll see all the covers that are in red are the 11 cover types that we did see in these 12 case studies. So I suppose the point is just that a lot is already being done, a lot is possible, even in quite challenging environments. However, these products are really only available in a very limited way and to very few small businesses. And we've seen that insurers have struggled quite a lot to offer products to small businesses at scale. So why have they struggled? What are the challenges? Moving on to the next slide, you'll see that we group the challenges we saw into 3 main categories. The first is product design. We saw that many insurers don't really understand the small business market and aren't at the moment often able to offer them suitable and valuable products. Secondly is distribution. So small businesses are extremely varied and they're often only very loosely grouped. So finding aggregators is a big challenge. This problem is made even worse because insurers who maybe work in the micro market are finding that some of the channels that they've been using for micro products, it's not possible to offer small business products through these channels because the value of the products is higher. So insurers are not able to offer small business products through their traditional commercial channels, nor are they sometimes finding that their micro channels are applicable. And so they're really having to be creative about finding new channels. Finally, and importantly, is insurance culture and demand. So understanding of insurance is low and there is high distrust of insurers among small businesses globally. So I'm curious to know what you think. Let's get some audience participation going on. In your opinion, according to your experiences with insurance, which of these 3 do you think would be the most challenging for insurers looking to serve small businesses? Is it product design, coming up with the right products, distribution, finding the right channels, or insurance culture, the fact that people don't know or trust insurers? So the poll should be appearing on your screen now. Please select the one that you think is the most challenging. And Jos, when we have the majority in, please bring up the results. So here we go. This is interesting. There's obviously no right answer to this question. I'm mostly being selfish. I'm curious to know your opinion. So here we have 18% who think it's product design, 22% who think that it's distribution, and 59% who think that it's insurance culture. Interestingly, just to tell you from the 12 case studies that we did, I think that distribution often came across as the biggest problem for many of the insurers. But there's no right answer because they were all extremely challenging in different ways. So thank you for sharing your thoughts. I'm going to pass over now to Jeremy, who's going to give you some really interesting information about how different small businesses can be understood and segmented. So Jeremy, over to you.
Thanks, Alice. So I think, well, the starting point really is that MSMEs, as we know, constitute an important driver of both production and employment in most developing countries. I think the second interesting aspect is that MSMEs are also a major potential market in developing countries for insurers. And so this is really where the title of this presentation comes from, the symbiosis between MSMEs and insurers. In developing markets, insurers are all looking for the next target market in which to expand their offering. And the core target market is traditionally your salaried employees, your government employees. But as that market becomes increasingly saturated, the task is then to move the access frontier, to move the market frontier out to reach the next potential target market. And invariably across countries, that tends to be the MSMEs. They tend to be the next most wealthy group of individuals. They have relatively regular incomes, and they tend to be relatively more situated in the urban areas. So not only is insurance important for SMEs, but SMEs are also important for insurers. So if we can go to the first slide, or the next slide, there are at least 3 ways that we think the insurance sector can contribute to the development of MSMEs. So the first is by improving the resilience of MSMEs. Like all individuals, like all people, MSMEs and MSME owners face a myriad of different shocks. Resilience refers to the ability to deal with unexpected shocks that have a financial impact. So the inability to deal with these shocks effectively will undermine MSMEs' ability to retain their existing levels of income. They may be required to dip into their savings, which limits their ability for future investment, or they may be required to borrow to deal with that risk, which is obviously expensive, and in most developing countries that's often at very high interest levels. The second role that insurance plays for MSMEs is by enabling productive risk-taking. So for some MSMEs that are growing or have the potential to grow further, the protection against specific business risks can enable some MSMEs to take risks that enable improved growth. So if, for example, if you take product liability insurance, that will protect businesses against claims of personal injury or property damage caused by their products sold or supplied by those MSMEs, which encourages them to take the risk of offering a new type of product or developing a new type of product. And then lastly, which I think is an interesting emerging and an important role that insurance plays, and that it's important that we don't forget, is the role of capital intermediation. So insurers are amongst the largest intermediators of capital in most economies, and so the insurance sector plays an important role in ensuring a healthy capital market, and from an MSME perspective, making sure that the necessary capital is available for businesses that have the potential to grow. So if you go to the next slide, through a number of studies that we've done, we've looked at MSMEs across a number of different developing countries in Southern Africa and Asia, and using some consumer surveys that we've done, the FinScope consumer survey, across, I think these figures are from across 6 different countries, we found that the major risks faced by most MSMEs are personal in nature. So 25% of MSMEs identified an illness in the household as a major risk. 10% identified the death of a main income earner, 11% the death of another household member as major risks. These are really personal in nature. And what's interesting and really important is that these MSMEs do not distinguish between personal and business risks in the same way that they don't tend to distinguish between personal and business incomes or budgets. They don't differentiate between personal and business risks. And that has an important implication for the provision of insurance, because it means that for most MSMEs, their primary insurance need is really personal in nature. They need health insurance for themselves, for the principal of the business. They need health insurance for their family. They need life insurance. They need funeral insurance. And I mean, due to the lack of distinction between personal and business, a personal risk event is actually really important for an MSME to cope with. If they're forced to take out a loan, sell assets, or use, which is another commonly used coping mechanism, that can be really expensive and can undermine their business in the long term as well. So, as a result, personal risk events is really important for all MSMEs. Even for more developed MSMEs that may distinguish between business and personal, they still face personal risk that they need to manage. So, but if we move to the next slide, here we have segmented the MSMEs based on two parameters. So based on their level of motivation, which is why they started and continue to run their business, and their level of education, which is a proxy for their ability or their capacity to grow. So this segmentation gives us 4 substantially different MSME segments with substantially differing potential for growth. So the driven achievers, which are in the top right quadrant, constitute those MSMEs with both the motivation and the ability to grow. Now, as I've just discussed, all of these groups would have a need for improved resilience against personal risks. The driven achievers have a greater size and higher revenues and would be the most likely MSMEs to also benefit from specific business insurance that enables productive risk-taking. So this subset of MSMEs is a really important group to focus on, because this is really your engine of growth. When we think about MSMEs being an engine for growth, what we're really talking about is those MSMEs that have the potential to grow. When you look at MSMEs across a given country, most of them realistically are unable or just don't have the motivation to really grow to a significant extent. They're important to maintain the livelihoods of those entrepreneurs who are running those businesses, but realistically they're not going to dramatically increase production at a country level or increase employment to any significant extent. So it's important that we identify those MSMEs that have the potential to do those things and to focus on them and to understand what their needs are, because improving their ability to deal with risks not only improves those MSMEs but has larger impact more broadly on the development of the economy. And for this subset of MSMEs, we can think of the second point around productive risk-taking as being important to enable them to take the risk to further grow. Often insurance is a requirement to access capital in it as well, which is also important to enable further advanced growth. If we go to the next slide, access to credit is frequently identified as a major barrier to growth of MSMEs in developing countries. So this slide shows the same segmentation using education and the desire or aspiration to grow as the segmenters. But here, in the last slide, we looked at MSMEs in Malawi. This looks at MSMEs in Zambia. And we see a similar story of a smaller proportion of those MSMEs falling into the driven achievers bucket. And another thing that this illustrates is that the access to credit for all the different types of MSMEs is fairly similar at about 6%. And And a lack of available capital in Zambia, as in many developing countries, is one driver holding back the development of, or the growth, particularly of the driven achievers who have the ability to grow at a dramatic rate. So how does this apply to the insurance industry? As I mentioned previously, the insurance industry, as it develops, pools large sums of capital, which it then intermediates directly or indirectly. So the industry itself is a critical driver of capital market development and enables the efficient allocation of capital, and particularly long-term capital, because insurance pulls in and pools large deposits in the form of premiums. It has access to long-term capital, which is particularly effective in enabling long-term MSME growth. So the growth of this insurance target market not only reduces the risks of enterprises, so if we go to the next slide, growing the insurance target market not only reduces the risks of enterprises. So by providing insurance to SMEs, it not only reduces their risks, but it also helps to develop the insurance industry itself. So as I mentioned at the start, the MSMEs are an important target market for the growth of the insurance industry. And so so this slide is just a fairly simple representation that the insurance industry and MSMEs really have this symbiotic relationship that I mentioned at the beginning. MSMEs constitute an important target market for insurers, which enables the insurance industry to further develop, which in turn enables the insurers to offer better products designed better for the further development of businesses in that industry, enabling better designed products and covering more risks, and further developing capital market and the available capital for intermediation through the insurance industry. So in conclusion, if we go to the next slide, there are really four main points, I think, when we look at insurance and MSMEs. So insurance is important for MSMEs at three levels. Firstly, insurers offer MSMEs greater resilience in the face of shocks. And that applies at a personal level and applies to all MSMEs, regardless of their size or stage of development. All MSMEs face personal health risks, life risks, and if insurance is able to make them more resilient in the face of those shocks, they're less likely to fall back into poverty and more likely to develop and grow. However, if we look at the subset of MSMEs that have a potential have real growth potential, because they have the skills and the aspiration, then we need to look at more specific types of business insurance that enables productive risk-taking behavior. So for example, even insurance that covers an asset enables MSMEs to purchase new assets at lower risk because that they know that they're covered should those assets get stolen or for whatever. And then lastly, over the longer term, the insurance industry is able to pool large sums of long-term capital, and one of the biggest constraints to growth amongst MSMEs is generally access to finance, and the insurance industry plays a really important role in terms of intermediating capital and creating more efficient capital markets, providing critical capital to those MSMEs. And then lastly, as the MSMEs grow, the nature, timing, and extent of insurable risk exposures is likely to differ, and it creates a business case for different insurance product offerings. So as MSMEs become an increasingly viable target market, well, MSMEs are a critical target market for insurers to grow, and as MSMEs develop, they in turn become increasingly important in terms of the ongoing development of the insurance industry. So that concludes my section, and I think we now hand over. Thanks.
Sure. Thank you so much, Jeremy. That was super interesting, and really appreciate the detail that you've gone into, both on the nature of SMEs and their needs, and on what the role of insurers can be. So now we're going to hand over to Nick Smith to hear really on the ground from one large insurer how they're putting all this into practice. So thanks, Nick. Over to you.
Thanks, Alice. Hello, everybody, and thank you for taking the time to attend this webinar today. I'm hopefully going to share with you a little bit of an insight into how AXA approaches the SME segment and SMEs, that you'll find interesting. But obviously, if I'm not covering anything, then you've got the opportunity to ask questions as we go through, which Alice will pick up. So I'll start our little story with the first slide, which is just to give you a view of how we see SMEs. So we're talking here of professionals, retailers, tradesmen, producers. But just to give you a little bit of context, when we consider it from an insurance point of view, we are looking at businesses between 0 employees and 49 employees. And the reason we do that is that we are trying to create a much more simple, accessible, easier to understand proposition for the smaller end of SMEs. So just to be clear on that. And when I say 0 FTEs or full-time equivalents, full-time employees, it means they're self-employed. Okay, so if I move on to slide 2, I just wanted to share with you a little bit of contrasting between the 3 major segments, customer segments in the commercial lines world, or commercial businesses. So if we move to the next slide, just in terms of how they view or perceive risk, or what are the main concerns that they have. So I'll focus on the SME graph on the left-hand side, but I'll touch on sort of the differences that you get as you move into larger corporations. So the conclusions from this research, which wasn't from AXA, it was from Royal Sun Alliance, is that SMEs tend to perceive risks that are mainly linked to macroeconomic changes, and are really focused on the operational costs of their business. So what does that mean in concrete terms? They're really concerned about cash flow. They're really concerned about what will impact their customers providing business to them. So we're talking here again in the context of these very small businesses, people that are looking to basically keep their business running, surviving. But we have obviously different types of customers that have different motivations for running, for starting these small businesses. So AXA's own research again highlights the fact that cash flow, client retention, limited amount of time to spend thinking about the general risks around their business means that the word risk, the word insurance, is not something that's at the top of their mind. It's not something that they see as adding value to their business without being prompted or actually going to look for advice. And when I mean by look for advice, as Alice touched on in the poll earlier, who do they turn to if they want to know a bit more about insurance? So we're thinking agents, brokers, maybe their bank. So again, this isn't a topic that small businesses think and live and breathe in. If I just quickly touch on the other 2 segments, you'll see that as you get into larger businesses, they become far more focused on business interruption, market development, and in the larger companies especially, the development of, if you like, the emergence of cyber risks. So how well are they protected? How well are they protecting their data within their businesses? So you just see a difference between small businesses and large businesses, and as Jeremy picked up on, a lot of the small businesses, it's their own business, it's there to provide themselves, their family with livelihoods. There's a different motivation and different view of how to protect themselves. If I move to the next slide, it's just to highlight one specific thing, but really a key message out of this. AXA conducted some research in 2015 just to think more about climatic change and do small businesses consider that to be a risk to their business. Interestingly, 77% thought that climatic change does present a long-term risk. Part of the research found that the more that we've got businesses that are either directly linked to industries that are reliant on, if you like, good weather, so a lot of the agricultural, food industries, they see the climatic change having a significant impact. But then you start thinking about, well, we've got manufacturers and other industries that are reliant on value chains that go all the way back down to the basic of farming. And not a lot of them see the direct impact of climate change on their business because they see their very sort of direct clients and direct part of the value chain. So the more you interact with customers, the more that, or SMEs, the more that you actually make them realize what the implications of this word risk and how far down the value chain does it go, they start to realize that they are quite dependent on these types of events. The real takeaway though, which is not that hidden in here, is, and I'm using this as an example, that SMEs are looking to insurers to help them better understand these types of risks and the impact on their business. As I mentioned earlier, this isn't something that they live and breathe. I think if you use the word risk, a lot of companies would probably think this is complicated, this is technical, this is insurance, I know nothing about this. So I think the challenge of the industry is how to make this more relevant. So what are we doing in AXA directly? So on the next slide, it's a picture of our thinking. So the first thing is that within AXA, the first thing we started to do 3 years ago was to actually think more client biased. So when we talk about an SME, we actually talk about clients. When we have a look at our other products in an insurance company, they tend to be more, well, product focused. SME by default is a small business. So when we start thinking like that, we start thinking a little bit more broadly about how do we bring offers, insurance, services to these small businesses, ultimately to help them develop, grow, be sustainable in their own right. I think this is a key point that if any insurer can put a proposition and offer together with the view to actually helping the business develop, I think they're going to win. So, by revealing our strategy, that is exactly it. First off, on the left-hand side of this slide, it just describes what we believe being a partner to SMEs really means. So let's be really simple. Our products, they are very complicated. We need to simplify them. And again, linking directly back to what Alice said at the beginning, there are issues around awareness. There are issues around complexity. There are issues around insurance culture. And do we actually think about the customer when creating products and offers? And are they accessible? I think again, the accessibility, the affordability, if they can afford it, do they understand the value? So there's a huge opportunity for insurers to simplify their core insurance offer. In addition, we believe that there are many opportunities to develop new services. So first off, services around business protection. So how to help them better understand risk, what are the different types of risk, what can they do to mitigate the impact of those risks emerging, but talking in a completely different language to what I've just said. So trying to avoid the word risk and more looking at what are the 2 or 3 things that will stop your business operating. What are the 2 or 3 things that you really think would impact your employees being able to come to work? So really thinking about risk in terms of practical and common language to support small business. The second area that we really believe is, again, probably more our core insurance capability or service. We call it business continuity. It's claims. So when a customer, an SME, needs to use our products because they've had an accident, they've had a fire, they've had a theft, there's been a flood. What is it that we concretely do to support an SME that is different to how we support a large corporate business or a retail client? And I'll give you a little example. It is very simple. Small businesses, if they stop operating for any reason or any length of time, will have a cash flow issue very quickly. So as an industry, do we recognize that? Do we act in minutes rather than days and weeks to actually support that business in the event of something which is stopping them or hindering them from carrying out their day-to-day business? The final element of services that, again, we really believe small businesses are looking for, it's what we call support. These are the services that are, I would say, adjacent to insurance or outside of insurance. So bringing accountancy services, bringing financial advice, bringing loans, bringing things that help that business and strengthen that business and help it survive, but not insurance services. So again, our thinking in AXA is lots of small businesses do not have easy access to these types of services. So can a large company put them together in a way that makes them more accessible? I'll give you a little insight into the research that we conducted last year, which is quite interesting, which actually reinforces my passion for this segment. Small businesses told us that, yeah, very interesting. We like those offers, we like those services if somebody could put them together for us, but we wouldn't come to an insurer for them. There's no legitimacy for insurers to offer those types of services. Why would I come to you for a bank loan, for example? Why? What is it for me? My interpretation of that is that insurers have yet to really provide a simple product with the real services around their core insurance. So again, around risk and mitigation and claims. I think if you can provide those, then you start opening up the legitimacy to offer more. And I think, as Alice said, and I think as it was pointed out earlier, there is still a large trust issue between small business and, I would say large business, but the likes of AXA or any large insurer. So, in a nutshell, we want to be far more service orientated and simple. But what does that mean internally for us? So we have strategic axes, pillars, whatever you want to call them. The first one is customer, and it's putting the customer first. The second one is simplification. We really need to simplify what we do and how we offer it. Digitization. So what we mean by digitization is making it much easier for SMEs to access our products, to view what we offer, to access tools, to buy, to monitor, to do anything in a more digital way. We know that these companies are moving in this direction in their daily life, their business life. We need to transform insurance to be less legal contracts and far more opening up a digital interaction with our clients. And the final one, which is again, having worked in this industry for 20 years, insurance companies are based on data, but we're not very good at managing and using that data and turning it into information that we can help and push and support our clients. And I'll bring that to life in a couple of slides. So in a nutshell, this whole thing, we need to be more aligned with SMEs' business interests and less focused on the pure insurance risk elements. Okay, so if we move to the next slide, I'll bring these to life maybe very quickly or even skip to the slide after this. So what we mean by being simple, we need to offer specific insurances to specific types of SME. I think in one of our more mature markets, I think we have up to 1,000 sub-segments of small businesses. We use the example of hairdressers. So if we say that we've got a sector of hairdressers, when you actually go and talk to the clients, I call them hairdressers, they actually do not classify them all themselves as hairdressers. You have beauty salons, you have grooming parlors, you have men's coiffeurs, you have high-end I could say hairdressers, but they see themselves as differentiating themselves in a competitive market that we would call hairdressing. So you really need to understand all these different subsectors and then offer them something really specific. That's number one. Number two, I mentioned around digitization. We're just looking to make insurance easier for people to understand. So the image I've put in there is of a more icon-driven way to access insurance information from AXA. So we don't talk about risk in any of these tools that we've deployed on the web. We talk more about what are your assets, do you have employees, are you looking to protect your employees, do you want retention, do you want to retain your employees, and trying to connect the insurance offers with those needs in a much more friendly, simple manner. I will move quickly onto this next slide, because I think it brings to life some of the specific examples. So the way that we look at the insurance value chain, you have everything from protection, so education of our clients, risk diagnosis, through to risk reduction, so what actions can we put in place, or the SME themselves that just minimises the risk or risk events occurring. Can we provide more monitoring of those risks? Can we provide alerts? So that's very much around, if you come to AXA as a client, we will help you try to manage and minimize those risks. But like I said, we try and do it without using the word risk when we talk to the client. So we have, for example, that icon-driven business wizard, as we call it. Very easy to use, very logical for a customer. We have apps that allow end clients to put very basic information in that allows them to look at what type of risks they should be looking at in their business. So anything from how large is your premises? Do you have sprinkler systems? Have you got fire alarms? Have you got burglar alarms? It looks at things that really minimize the risk, but in a more customer-friendly manner. We have lots of web content, so clients can come into our website and find more advice. We have some connected initiatives. Business Shield, as we call it, is about connected buildings. So can we use some more of the future technology to help us monitor what's going on in businesses? And this is not just from a risk point of view, but also we can look at the energy savings from managing the lighting or the heating within their premises. So everything about can we help them manage their costs of running their business. When we talk about monitoring, we've got weather alerts in nearly all of our countries now. So if we know that there are certain weather storms coming in certain geographies, this is within countries, then we will send messages to our clients just to make sure that they're aware of these events coming, the severity of these events, and then we will help them in terms of specific direct action that they can take to try and minimize any impact. So again, there we're looking at simple things from do they have access to sandbags if it's a flood event? Have they thought about moving their stock or equipment up to a higher level, the first or second floor in a building? It's very simple advice, but as these businesses it's just prompting them to think about these things, knowing that they're very focused on running their business and maybe aren't thinking about their assets. If I switch to claims, and I apologise for running through these in quite a quick manner, I think I could spend a lot of time going into these individually in quite a lot of detail. But when it comes to claims, we're very focused now on offering a much quicker claim service. So not only by using technology, but also changing internally our culture and processes around checking everything 15 times. We should have some more digital and automated ways of checking for the validity of our insurance products. So has the customer paid the premium? That's quite a simple flag to get through quickly. All the way through to fraud detection. We need to change the processes to make them far quicker and flag the claims that we're really worried about, but deal with them separately. Deal with the 99% of claims that have got no issues, in minutes, if not well, hours, if not minutes. So again, we talk about a cultural change. We don't necessarily need technology to drive this. A lot of it can be done through, again, our culture internally. We're also looking in claims at developing technologies around drones. So can we actually get more quickly to large events, send drones up, get a better view of what actually is the situation, and then again act more quickly to help the customer get their business back up and running, find them alternative accommodation or warehousing or facilities, so that we're looking more about keeping that business in business as opposed to our traditional way of thinking of a claim as a claim, and we eventually pay it once we've checked everything. Then we've been developing, as probably a lot of insurers have been, what we call resilient repairs. So again, think of a flood event, a premises has been damaged by water. Do we just go in, dry the business out, dry the location out, and then repair it, decorate it and leave? Well, no, we don't. What we say to them is, look, you're either in a high-risk area for flood, they may be near a river, and we offer them what we call resilient repairs. So as a simple example, that could mean moving their electrical circuits from the ground up to 2 or 3 or 4 feet, so that the next time it happens, the electricity can still be powered. So therefore, we can help them with that. We can also do something around the type of materials that we use at a low level within their premises. Again, so that if they have another event, the repair is actually much quicker because we can take more of a component approach to how they organise their building and just repair the bits that get damaged. So I'm sure there's a whole list of other things, and there's probably better experts on this call than me around resilient repairs, but we certainly need to look at how to help the next time make the impact smaller than it might have been. Then I'll move on to the support area. So this is what I talked about earlier. So can we help businesses grow? So we have deployed some tools. So one of them we're very proud of is called Business Guardian Angel. And this provides much more information to help a business. For example, the newest one we're testing in the UK is actually to help them create a social media presence and giving them tips and hints about how to do that. And we've got tools that allow them to actually create it within an AXA app, I think, more than anything. So there are things that we're doing to say, look, we know that you haven't got time to do this. We do this day in, day out as a large business. Can we bring that expertise in a packaged way to you? We can also offer them content. We can do quite a lot, and it's quite an innovative but yet simple service that we're starting to develop. There are other little examples that we have. If I look at the one at the bottom, AXA Alununu, we've just launched a new offer in France, which is more geared towards the very small business and towards women entrepreneurs. But it's offering them access, very quick access to childcare facilities. So if for any reason their own childcare service fails or it's closed unexpectedly, we know that if you're running a small business of 1 or 2 people and you've then got to look after your children, that's going to cause a problem for either 1 day or 2 or 3 days. So again, simple partnerships where we can say, well, that's fine, we can help you out. We've got nannies and the validated nannies, qualified, certified nannies. We can provide the access to that. And if I look at the top right, we've got what we call Chromium, again in France, where we're starting to bring together some of these partnerships and services, such as QuickBooks, which can help SMEs with their financial accounting. What we're trying to do, as you can hopefully see and hear, is trying to bring these things to SMEs in a manner which is easy for them to access. I won't emphasize that point enough. We're not saying that AXA should provide these types of services, but if we can bring them together, and maybe we can provide some discounting through those, then we think it does provide small businesses with a significant advantage over those that can't access these very easily. Okay, I think I'm probably going over my time, but I think hopefully you get a feel that we try to develop a more service approach. And I'm quite happy I've left this slide in, but from what Alice said earlier and your response on the survey, there is a cultural problem. So we are human, or in this case not, we're superheroes, but we've launched some, I guess, more innovative, left field digital marketing campaigns. This one was launched on April Fool's Day 2015 in the UK, and it was just to say, look, we've got a sense of humour. We're people ultimately behind insurance companies, and it was the response that we got that was more interesting. We had, I think we were trending, the highest trending on Twitter on April Fool's Day. This ultimately ended up being an award for the team, the marketing team, for innovative marketing and disruptive marketing. But the real background of this was, let's just present ourselves in a more human way. We are really here to support our small businesses, and we know even with everything that I've shared you here, we have still got a significant way to go. I'd like to thank you for listening, and I'll pass back to Alice.
Brilliant. Thank you so much, Nick. And I think it's really interesting the way you describe AXA's approach as really a partner to help SMEs grow, and a kind of holistic approach rather than pure risk approach. That was very interesting. Thank you very much. And I'd like to now complement a little bit the kind of view from the ground that Nick has given you with another example to give a bit of diversity to our examples from Latin America in this case. So let's go to the slide with the example of a really interesting product from the insurance company Pacifico, and that highlights some of the emerging good practices that we found in our case studies in the research we carried out last year. And so this is a multi-risk product that's offered to small businesses in Peru. It covers really quite a wide range of risks: fire, robbery, it has some health benefits, and so on. And I think it's interesting because it really highlights some of the good practices that we've been seeing. First of all, we found that it's quite important that insurance companies consider, really as Jeremy has already highlighted, the existing mechanisms that small businesses use to manage risks and how they already think about risks. So the Pacifico took the approach of aligning their advertising to connect in the way in which clients connected business risks and their families. So people would see problems that might occur in their business and families as very interconnected, as Jeremy mentioned, and this was really leveraged by Pacifico in the way that they advertised. Secondly, Pacifico covered multiple risks, as I mentioned already: fire, earthquake, civil unrest, natural disaster, robbery, cash in premises, really a long list. And it's worth pointing out that the cover in each case has to be quite small to keep so that the product's not too expensive. But in this case and in many others, insurers found that small businesses preferred a product with limited, smaller covers spread across a wider range of risks, rather than, say, a product that would pay out a huge amount in the case of one risk, say fire. Kind of maybe interesting in the light of what Nick's just said about how they customize really down to the level of different kinds of hairdressers. We actually found that some insurance companies are quite worried about customizing to that level and are finding it not practical and not cost efficient for them. And what the approach that some have taken instead is to standardize the product at the level of large groups. So for example, they might either work with, create one product for one distribution channel, say one MFI, or in the case of Pacifico, what they did is they broke their small business market into three large segments, from the very smallest business to medium to the larger small businesses. And they offered three basic versions of the product. And it was up to their sales staff to pitch one of those products, depending on the business they were meeting. Finally, health is quite interesting. We've seen that this is a really unmet need for small businesses, and that there is a lot that insurers can do. No need, of course, to compete with national health schemes, but we found that even really small basic covers such as a hospital cash cover or covering the work of an employee while they have to go to the hospital can make a really big difference to small businesses. And in the case of Pacifica, it was even more simple than that. They just had offered a helpline that every employee could call when they had health problems and transport to the hospital in case of an emergency. But this was a really attractive service. And I think this really speaks also to what Nick was saying about offering a package of services rather than just pure insurance. If you'd like to know more about that case or tons of other cases featured, you can see them in our paper on small businesses, which we'll share with you after the webinar. Secondly, I just wanted to talk a little bit on the next slide about distribution, because this, as I mentioned, was a really pressing issue for many insurers. And I just wanted to highlight the main distribution channels that we saw being used by insurers during our case studies. So these were financial institutions as an obvious starting point. Many insurers who've had microinsurance business have experience and strong partnerships with them that they may be able to leverage to offer to those clients who have more advanced businesses. Second, that was a very common approach, was to look to other organizations or businesses within the same supply chain. So this might be the supermarkets from which a small shop buys its goods, right, to start. There's an example of it like that in the Philippines where they acted as a distribution channel. Or it might be the buyers, so where small factories creating clothes then sell that on to a buyer, that buyer can act as a distribution channel. Other examples include governments, agent networks, and business associations. Essentially, it's very costly to sell directly to small businesses, so any organization that is aggregating small businesses is worth looking at. Brilliant. So that brings the formal presentations to an end. I just want to ask all of the presenters before we move on to the Q&A to offer one key takeaway, just one takeaway from what they presented to you today. So Jeremy, let's start with you. What's your takeaway?
Okay, thanks Alice. I think the biggest takeaway for me that came through, I think, in everyone's presentation was that it's really important that we understand SMEs and the customer granularly, that they're not all the same, and SMEs, we need to segment between different types of MSMEs and what their different needs are, because they have, and because that relates to different types of products and different types of product design.
Brilliant, thank you. And Nick?
I'd be boring and completely agree with Jeremy, but I couldn't agree more. I think, as you heard me say, I think it's engaging with SMEs in a different way, that's simple, more relevant, more aligned with what their interests are, and making it easier for them to access insurance, take away the myth.
Brilliant, thank you very much. And my takeaway from listening to these presentations really has been the level of organizational change required to serve small businesses. I was really struck listening to Nick's presentation that they really had to make changes at the organization, the process level, how they handle claims, starting up new positions and so on. I thought that was a really interesting point. So thank you. This is your moment now. We have 15 minutes. Please keep typing in your questions and we'll get to as many as we can. But let's start. So the first question I have is about AXA. And Christina would like to know whether in countries, does AXA work together with local insurers, or is it acting directly as the first insurer for small businesses?
If I understand correctly, then we operate on our own, so direct into the market. We do have bank assurance arrangements in a lot of our markets for SMEs. In Africa, we've got some slightly different models. So we partner with we have a joint venture with a company called Micro-Ensure that you may have heard of. But generally, we're direct at AXA. I think the challenge we still have is nearly, I'd say 99.9% of our business comes via distributors. And I personally think there's a huge opportunity to go more directly to SMEs, provide them with higher value for money, if you like, because I think ultimately we can simplify the offer to something that require intermediaries. But I am talking here of the very, very small businesses that find it difficult to access and afford insurance today.
Mm-hmm. Brilliant, thank you. And a question for both of you. Do you attach a monetary value to your definition of SMEs? Or do you look more at employee numbers or something else completely? Maybe Nick, you can keep speaking while you're unmuted.
Okay, so no, and there isn't, if I'm quite honest, there isn't a clean frontier for what we consider to be an SME and I guess a larger, what we call mid-market client. So we use more guidelines internally. So we have lots of filters. So ideally we use FTEs, so employees. We use turnover. So again, our upper limit on turnover is 50 million euros, but that's a very European-centric value. We also, because we're not great, we sometimes use the sum insured in some of our markets, mainly in Asia, as a proxy. The best measure would be that we actually collect better customer data when we actually do insure these guys. So it really is about the complexity of the business is what we're trying to get to, and we use proxies. I'm not going to joke that they're anything better than that. They are proxies.
Brilliant, thank you a lot. And Jeremy, we'd be curious to hear your take on this as well.
Yeah, I mean, from our side, we don't use a specific definition of MSMEs. We literally, in terms of the research that I presented just now, it's defined based on whether someone themselves identifies as their main source of income being from their own business. And for the most part, that's obviously generally really small micro enterprises. I mean, I think the question for me is firstly, there's multiple definitions of MSMEs or SMEs, which is obviously where the question comes from. And I guess the question is, how useful is it to define it according to something like number of employees or revenue or something like that. I think especially what Nick has shown and discussed quite a lot is that we need to understand the different SMEs and what their different needs are, and the difference between being, say, a small business or a medium business and moving towards being what a formal provider may consider a commercial customer. Is there a big difference between that, and should we not rather consider what are the actual fundamental differences between the different types of providers and of businesses and what their different needs are? It seems to me like maybe it can be a slightly arbitrary definition, depending on how it's defined, or if it's defined too simply.
Yeah, absolutely agree. I think we had quite similar outcomes from our research. Thanks a lot for that. So I want to now dig a little bit more into this environmental theme that appeared in Nick's presentation. And the question is whether AXA offer any services or products that help SMEs reduce or monitor their greenhouse gas emissions, their resource consumption. What about renewable energy? Is this an important theme for AXA, and how do you integrate it into your products?
Okay, so this is probably the hardest question. So we do offer products and I guess insurance cover for, let me start off, for those segments, so renewable energy segments, just in terms of what the business activity is. So we do see it as an industry that we should support, and what I mean by that is providing insurance, again, to maintain and help those businesses through the long term. If I go specifically to your question, Alice, some of those areas that you talk about is difficult for us to provide products around. But if I take the most difficult one, because I had this question from one of my colleagues around the low emissions, the thing that I think we can offer, and we're starting to I guess, develop these types of solutions, is around connected devices. So if we can partner with some of the firms that manufacture these connected devices and offer them to our clients, then we think that, as I mentioned earlier, there's an added value to monitoring the likes of smoke for fire or water, you know, pipes that are leaking for water damage. We can also look at, well, is there a service we can help them with reducing their carbon emissions or energy usage. So I think through that, but in terms of our product today, we don't really in that emissions and energy consumption. We do have some interesting new products and offers around parametric insurance, which I'm not sure how many people would have heard of or understand. I'll give you the only example that I like to use. So in some of our African markets, we can offer insurance with a bag of grain. So a farmer goes into their local shop, buys the bag of grain. With that bag of grain, they have the option to buy insurance for it. And that insurance is, let's, for argument's sake, say it's $5. It's very low cost. If they want it, the shop owner can activate it. So it basically sends a message to AXA, who then sends a message to the farmer's mobile phone. He then gives us the GPS coordinates of the field or fields that he is planting that bag of grain in or seed in. And then the parametric insurance that is the offer here, basically if there's a weather event in that area and we know the severity of that weather event through GPS and weather tracking and mapping, if we see the severity means, for example, that the whole field is likely to be lost, the crop is lost, we will automatically send that, the insurances automatically send the funds directly to the farmer so that he can go and replace that bag of seed. So we're starting to do some interesting things around, I guess, real sustainable insurance, but linking with technology.
Brilliant, thanks a lot. That's perfect, very interesting. So now I have a question for both of you. Which markets have been the most successful, in your opinion, in offering SME insurance? And why do you think, you know, maybe if you can mention a country which you think has been particularly successful in this, do you think there's any kind of key success factors, anything that we can learn from those countries? Jeremy, let's hear from you. I know you've worked across quite a wide range of countries.
Okay, tough question, because across most developing countries, targeted SME insurance doesn't exist to any significant extent, I don't think. There's undoubtedly pockets of products being offered, but yeah, in the main, we haven't seen a great deal. I think one of the countries where I haven't done as much work, but is South Africa, and I think so. I have less recourse to specific examples, but I think the approach to or the provision of insurance to small businesses in South Africa has probably been relatively more successful than some of the lower income developing countries that we've worked in, purely because the level of development of the insurance industry is that much greater, which enables them, as I sort of tried to show in that diagram in my presentation, that the more developed an insurance industry is, the greater ability they have to provide targeted insurance products that are better designed to meet the specific needs of all consumers, and in this case specifically small businesses. So yeah, I think that would be my answer.
Absolutely, thank you. Yeah, it's a tough question, and I'm going to turn it over to you as well, Nick. Which countries have been most successful for AXA from the small business insurance point of view, and why do you think that is?
Yeah, I think I've got a similar view to Jeremy. It is a hard question to answer. I'll give you my take on the question and then the answer. So the markets that are the most developed are the ones that are the most advanced in terms of offering, I guess, simple, relevant, easy to understand insurance. So the probably leader that I've discovered is Switzerland. But I think you've then got to look into the whole culture of the country, how people are brought up, how their view is of risk, and they're quite risk savvy in Switzerland. So that's probably got the highest penetration of SME insurance possibly in the world. I think you're talking here at 90% sort of levels. In terms of being the most advanced in terms of, I guess, innovation and probably more distribution, it would be the UK and the US. So I think there's different angles in here. If I then look at the likes of Africa, I think they're taking a leap into using technology in a much more, I guess, more advanced way, but again, a simple advanced way to actually provide new ways of buying insurance for small business. But I think, again, sort of back to Jeremy, I think you get pockets of good practices. South America is probably the area that has got the least development of SME insurance. So in Mexico, for example, our estimates are less than 10% of SMEs buy insurance, and it gets lower the further south you go, Colombia, Brazil, the penetration is much lower. So it depends how you want to view the question. So I've answered it the way that I see it, but as Jeremy said, the more mature the market, the stronger their offer and the higher the penetration. But it's not just connected with how the insurers are operating, it's connected with maturity of the market in general.
Brilliant, thank you very much. So I think we've come to the end of the questions that we have time for today. But we will try and go through the questions that have gone unanswered and try and get back to you. I just want to, a few people have been asking the same question, which is whether you're going to be able to access these slides in this webinar afterwards. Yes, you will. We will be sending you by email a recording of the webinar, the slides. We'll also send you our paper, which I've been mentioning on small businesses, where you can find lots more examples and information on the topic. Great, so let's move on to the very last slide. Just to let you know that it's not all over today. The webinar series continues. We have 3 more webinars coming up. The first one, the date is already set for the 11th of April, and we'll be talking about agriculture and climate risks. As you exit this webinar, a link will appear to sign up already to that webinar, so please do. We look forward to talking to you then. We will then have another one on health, and the final one on insurance regulation. So more information about those will be coming up soon. And my final request to you is that after you leave this webinar, you will receive a message asking you to fill out a small evaluation of the webinar. And we really appreciate your feedback and suggestions, so please do fill it out. So that's it, nothing left apart from for me to say very big thanks to Jeremy, a very big thanks to Nick. Thank you for joining us. It's been really interesting to hear your insights. And thank you to all of you for joining. And we hope to see you in the next webinar during April. Thanks a lot, everyone. Goodbye.